Obstacles are placed in our way to see if what we want is really worth fighting for. That's an anonymous quote and a good one. What is it you really want? And what are the obstacles that are in your way? Well, I tell you, it is simply making sure that 10 to 15 minutes every day you devote time to follow these stock charts, to practice trade, to study to show yourself approved, to take the trainings we put out every day, to do the minimum that we ask you to do. You cannot do it in an hour once a week. You can't do it in 2 hours on a Sunday. 15 minutes, 10 to 15 minutes every day, doing this day in and day out. How long will it take? I can't tell you. I can't tell you. It could take you months, years. It could take you decades. Probably not that long. But again, if you devote yourself to this, you can figure it out. It just depends how much you want to achieve. And think of what this means. If you can read stock charts and you can chart trends, changes in buyer-seller sentiment, and can jump into a stock or ETF, write it up or down. That would be with an inverse fund or a put. Of course, going up would either be buying it or buying a call option and watching it go up. It's exciting. We want you to practice trade with us. We're not a stock calling service. We're an education firm. That's what we're all about. Practice trading is free. Spending 10 to 15 minutes a day with us is free. You don't have to spend any money. If you are a student, if you're a person that doesn't have money, you don't have to learn how to do this. And once you learn how to do it, then the world is your oyster. Special training for all the subscribers for free at chartingwealth.com. It'll be in your show notes today. The secret of profit and loss bands. I really, really want you to have that. Let's look at what's going on. We see stocks are down for the day. Bonds and gold up. We like to see bonds and gold going in one direction, either up or down, stocks in the other. We're seeing that today as the day ended. Let's look at the week. What do we see? We always start with the S&P 500 down just a little bit, 0.02%. We see a red open box candle, really not reaching. Let's see if it reached a higher high so far. 286.79, 287.30. No. So we're still about 50 cents or so away from where we were with the high the prior week. This red open box candle means a slowdown in the up movement. Derivative oscillator still losing downward momentum. Price percent oscillator heading up, but not near crossing at this point. So again, remember the market bottomed back on the week ending the 27th of March. It tried to march up in the first and second weeks of April, and then it has just sort of petered, not necessarily petered out, but has slowed down. 2-day chart, we can see where it has flattened. Again, remember, we just had our latest 2-day candle finish drawing representing Wednesday and Thursday, and it's basically the equivalent of a green doji just about. It means lots and lots of indecision. If you had to say which way tending, you would say tending up based upon the color of the candle and the fact that the price percent oscillator is still heading up, derivative oscillators losing upward momentum. We go to the 4-hour chart. What do we see there? We see it edging over, heading down even further. Derivative oscillator losing downward momentum. Price percent oscillator heading down. How did we end the day? Had an up morning pullback in the afternoon. Ended the day, like we said, down just a little bit. What are we waiting for with the S&P? We're waiting to see if that 2-day chart is going to rotate over going down, or if the market's just catching its breath and getting ready to pop up again, or is the bull trap getting ready to be sprung? I don't know, my friends. I can see that we have a 200 period moving average line where, and again, on a 2-day candle, we see that 200 period moving average line being rather strong at this point. We've seen price just sort of hold off there. So what's going to happen? Is it going to bounce off that and head down? I don't know. I don't know. I don't have to know. Why? Because I'm going to follow the stock charts. And when the trend sets itself, I'm going to jump in and ride it either way. Either the weekly is going to turn around and cross over going up, or the 2-day is going to lose its energy and cross over, or what we call a recross, going down. It'll look something like we saw happen back on the 21st. And when that occurs, that will be our trigger, since the weekly is already in a down move, to jump in. It's just that simple. We explain it very well in our book. If you don't have the book, it's available. Check out the website. Live overseas, you'll need to email us. We'll send you a PayPal invoice. Otherwise, follow the link in the show notes. What do we see on the NASDAQ 100? Down for the day, 0.21. Now the S&P down 0.02, just barely. The Q's down a little more, 0.21%. We also don't see a red open box candle. We see a green up candle, but still not reaching a higher high. The price percent oscillator is closer to crossing over, going up. Derivative oscillator losing downward momentum. Hasn't crossed. Don't know if it's going to. If it does, it does. We'll have a weekly vertical crossover and we'll look to jump in and ride the up movement. But if it doesn't, and we see a sideways slide occurring, now the price percent oscillator is still heading up. Derivative oscillator is positive, losing upward momentum. Price itself, as far as our Heikin-Ashi candlesticks, we see sliding sideways. What did we end up with on the 2-day chart? A green up candle, no wick on the bottom, not a big candle, nothing like those prior 5 candles, 10 days of strong up movement starting on the 7th through the 17th of April. But we'll see where things are. Is the market just sort of gathering itself, digesting those gains, and getting ready to pop up again? Or is it losing its momentum and going to fall off the deep end? Don't know. We'll see what the market tells us. 4-hour chart still heading down as far as the price percent oscillator goes. Derivative oscillator losing downward momentum, still negative. We saw up movement in the morning, a pullback in the afternoon. So we'll continue to watch and see. Let these charts lead us, my friends. We don't have to be anxious. We don't have to be ready to jump into anything at a moment's notice. Now, when there is time for us to jump in, absolutely. We don't have to sit there and see all the time. We can take our time. We can follow these trends. Look at the weekly. With the weekly vertical crossover occurred back on the 28th of February going down, we had 5 weeks of incredible, inspired crushing, which meant if you were in something like PSQ for the NASDAQ 100, SH for the S&P 500, those are inverse funds. In fact, I'm going to put the inverse fund training at the end of today's video. You'll see a link there along with the video on what our book's all about and how to buy it. You'll see that at the end of the video today. So go to that. Check out inverse ETFs, how to make money when markets crash. We want you to have that training so you can practice trade that over and over and over again when those opportunities present themselves. Let's keep moving. We're going to go back to we're on the weekly chart. We're going to get away from stocks, go to bonds. Bonds up for the day, 0.53%. What do we see? Well, we see a green candle forming. We're reaching a higher high than the prior most recent high back on the 3rd, the week ending the 3rd of April. Now, nothing like the high back on the 13th of March, Friday the 13th at 179.70. We're still not there, but the market is trying to find its way. The bonds are. We see the price percent oscillator edging up, derivative oscillator still green but losing upward momentum. We go to the 2-day chart. What do we see there? It's just hanging around. Not enough energy to cross over going up yet. We want to see. Now, what do you think will happen if stocks really start to crash and head down? We would expect stocks to roll over on that 2-day chart, and we would expect bonds to roll up on that 2-day chart. In other words, recross in the direction of the weekly. Is that going to happen? Don't know. If that happens, do I know what I'll do? You're damn right I do. I will look to jumping into a wonderful practice trade going up on bonds because I would expect them to accelerate up. Is that going to happen? I don't know, but I'll know if it does, and I will react if that does happen. That's where we are. The 2-day is still negative. We keep hoping, waiting for that to cross over. Look at the 4-hour chart. After we had 1.5 days of down movement, really a lot of down movement on Wednesday. Tried to recover a little bit on Thursday, but again, not enough to really do much, not to see any separation. We're pretty much laminated on the price percent oscillator on that 4-hour chart. And in fact, the derivative oscillator was negative in the morning. So we'll see. Things may sort out on Friday. And you know what's so beautiful about Friday, my friends? We have the Friday effect, or some people call it the weekend effect, some call it the Monday effect. Whichever. What that means, and we have a great training on it. In fact, I think I'll put that out tomorrow. The Friday effect is all about the inertia going into the weekend. If markets are up on Friday, they tend to be, not all the time, and again, you'll check your charts all the time for that, but they tend to keep moving up, at least on Monday into Tuesday. If markets are down, same thing. So watch. If bonds are up on Friday and there's a crossover, then maybe you would have a jumping in point. We'll pay close attention, see what there is to see. But of course, you know what our problem's going to be is we're not going to have our candles finished drawing. In fact, our 2-day candle just finished today. So we're not going to have a 2-day candle actually on any of these charts complete until Monday. So we'll watch. There may be an opportunity in something like, if I recall correctly, let's go, because we're going on to gold right now. Let's talk about where gold is. 2-day and the weekly. This may be our best opportunity coming into the weekend, possibly. We see that the 2-day and the weekly are both confirmed going up. We have a green up candle this week, but not as strong as the prior week. It's not reached a higher high. This pesky derivative oscillator still negative, but that price percent oscillator is heading up nicely. We go to the 2-day. We see how it's spiking back up again on the price percent oscillator, derivative oscillator still losing downward momentum. And on this latest 2-day candle, what do we see happening there? Well, we see that a green up candle is forming, still not reaching a higher high, but it is moving up. That is good to see. Now, check out the 4-hour chart. 4-hour chart, I was looking at it earlier. It hasn't crossed yet, but it's getting awfully close to doing that. Will it cross over tomorrow going into the weekend? It may. And it may give you an opportunity to jump into an up move on gold. Don't know how much longer that would go. This is our weakest reason for jumping in. And again, we don't have to jump super early. If there are possibilities of jumping in on stocks in a down move, on bonds in an up move, we don't have to jump in until the candle completes drawing. It's nice to have the Friday effect working for you, and I want you to understand that fully. But at the same time, it's also nice to follow the rules, because the rules work a whole lot better than just how you feel. But the rules would be working for us if we do have a crossover. And again, tomorrow could be an up day for stocks, a down day for bonds and gold. It could throw all that out, and it may very well do that. That's fine. We don't get over anxious. We follow the rules because the rules work. And guys, when you go back and you look at how well things have worked for us with our weekly vertical crossovers this whole year, are they not beautiful? Look at gold. Look at gold. Look at gold. I mean, 3 opportunities to kill it on gold with your practice trades already this year. Look at the S&P 500. 2 opportunities to kill it on the S&P 500. Now, again, it was already heading up when we entered the year, but a beautiful weekly vertical crossover back on the 1st of November went way up, way up. Tons of opportunity throughout the course of that move. And then once the rollover occurred, a smashing opportunity to have beautiful put or inverse practice trades. And again, what about the Qs? Again, another beautiful opportunity back in November when the weekly vertical crossover occurred. And then on the 28th of February, that week end, when things crashed, another beautiful opportunity. So 2 there and 3 in gold. And then we go to bonds. Look at bonds. Beautiful. Bonds crossed over going up right there at the end of January. And it has been a beautiful sight to behold. So do you have to be greedy and jump into any and everything all the time instead of doing these little monkey trades for 50 cents or $1? Why wouldn't you take tens of dollars on beautiful trades when they're clean and easy with weekly vertical crossovers? and momentum following. Does it always work? No. You can see a failure occur every now and then. We had a failure, tried to cross over going down back on the 27th. It was a little bit early. And again, it then managed to pop back up and then move over for real on the 4th of October. Now, say the 27th of September. And then it really popped over and started accelerating in its down moves there around mid-month October. You would have gotten in a little bit too early, would have had a week of panic and maybe sale, but then you would have bought back in and made all of that back up in your practice trade. It was beautiful. So again, you need to be here with us every day. You need to practice trade. You need to learn the nuances. People then ask me for a hard and fast rule. When would I sell? I mean, I'd want to sell when it bottomed out somewhere around the 15th. Yeah, that's why we use our 2-day charts. That's why we use our 4-hour charts. That's why we use trend lines. That's why we practice and we learn the nuances of how to do this with each. And people say, why do you only follow 4 charts mainly? Well, it's because those are the ones that we gain our expertise with. And if you're in a particular industry and you have something that you really know a lot about and like, if you work for the Disney Corporation, if you work in heavy metals and mining or whatever it is you work in high tech, there might be stocks that you really like and want to follow. Well, you become an expert in that. You practice trade, practice trade, practice trade. You learn the nuances of the bonds and the timing. And I'm sorry, I said bonds, options and the timing. Puts and calls, how to do covered calls, all the cool things that you can learn by doing. That's what you do. And you become an expert in that. You don't be one of these jack of all trades that goes through 100 stocks a day trying to find some market inefficiency and make money on that and get hammered and lose everything. You calm down. You practice. You get good. And it becomes worth every single second of every single minute, of every single hour you spend learning and practice trading. Folks, that is it for all of you who are just interested in those 4 main charts we review. As we've been doing here lately, we're going to jump into oil, Bitcoin, and real estate, see where they went today. Now, first we're going to jump into oil. What's going on there? Well, the weekly chart shows us oil still hammering down. Now, it was an up day in oil. It was a bit of a swing back. 18.75% is where oil ended up for the day after it trashed down 50% the prior day. So we see the weekly still hammering down, still lots of energy pushing oil down. Even see that on the 2-day chart. Didn't plumb a lower low this latest 2-day candle, but we do see, and this is just the first day, so it was that prior Tuesday, Monday, Tuesday, particularly Tuesday. This latest candle, though, that's Wednesday, Thursday, what we see going on there is, again, the price percent oscillator heading down, derivative oscillator still positive, but losing momentum on that 2-day chart. So it's still going down. 4-hour chart, we see where things bottomed back in the afternoon on Tuesday, slid sideways on Wednesday, popping up on Thursday a little bit, but not even encompassing the losses that were incurred on Tuesday afternoon. So again, lots of downward pressure on oil. I mean, how low could it possibly go? It plumbed down to 185. I did have a buy order at 150, I think. And then another one at $1. Didn't reach that low, but I was sure looking for an opportunity there. And again, that's just me. I don't give any I don't give any advice on the stock market in any way, but I was looking for a potential buy at something like that. I figured if it got down to $1.50, why not pull the trigger? So let's keep moving. I'm going to go to Bitcoin now. We see Bitcoin, and let's get away from that 4-hour chart. Don't want to confuse you. We see the weekly chart on Bitcoin flat as far as the price percent oscillator goes. Now remember, Bitcoin went from about $10,000 down to $5,118 for a low. It's at about 70, what did it end the day? Somewhere around 7,548. So I'm just sort of rounding off went from 100%, we'll say, down to 51%, and now it's up around what the last was 72%. So it's lost a great deal, trying to recover itself a bit. We said the price percent oscillator's flat, derivative oscillator still negative on Bitcoin, trying to find a bottom there. 2-day chart heading up some. We did reach a higher high from here in a while. The high was up to $7,548.94. Price percent oscillators moving up nicely. That's good to see. And we go to the 4-hour chart. And of course, it is peaking up. We saw where it went up in the morning, boomed up in the afternoon, then pulled back some. And again, we saw the last was around $7,330.07. So it is trying to recover some. Again, we're not close yet to a crossover going up on that weekly chart, but that 2-day is trying to spike up some. Got a lot to recover after that crash. Okay, going to leave Bitcoin now. Go to real estate, which was down again, down for the day. Real estate made a little bit of upward provision for itself over the prior 2 weeks. It really saw itself bumping up the most after real estate bottomed out. And again, if you look at real estate, somewhere around the $100 a share mark, all the way down to a low, not as low as Bitcoin had gone down to, but 55.58. So again, from 100% to 55%, where's it recovered to at this point? Somewhere around the 73% mark. So again, lost about a quarter of its value. Look at that price percent oscillator heading down. Derivative oscillator still negative, losing downward momentum. We go to the 2-day chart. What do we see there? Well, we see where it sort of peaked back on the 2-day candle ending Thursday, the 9th of April, and then slid sideways, heading down. Price percent oscillator is about flat, maybe a little less than flat, heading up a little bit. Derivative oscillator losing downward momentum. So is real estate trying to establish a bottom and move back up, or is it rotating back over? Can't tell you. We'll continue to watch, see where that leads us, and where possibilities set up for potential practice trades on those. I hope our coverage of oil, real estate, and Bitcoin is helping those of you who are interested in those things. We love your questions. We'll try to answer a question a day when we get good questions from you guys. Just email us, cw@chartingwealth.com, or put it in the show notes of the YouTube channel. If you're not a subscriber at YouTube, go there and subscribe as you watch the videos. That helps us out a lot. Also, if you're listening on iTunes, please do the same. It helps us with our metrics. And say something nice about us when you can. Thanks so much, my friends. We appreciate you. We know you appreciate us. Thank you for all the attaboys. God bless. All the best from the whole team at Charting Wealth World Headquarters.